to do a quick audio test. If you can hear me, please give me a yes in the chat box. Awesome. Lots of goods here. Yes, yes, yes. Okay, cool. You should also see Sarah's slide says, my 2 proven option strategy of all time. Okay. And then her logo down there, shecantrade.com. Does everybody see that? All right, good. Now I'm just going to be quiet for a minute and just make sure that Sarah's microphone's working, and then I'm going to introduce her and then turn her loose on you. You there, Sarah? There you go.
Hi, Hubert. Yep, thanks. Can you hear me okay?
Yep, you sound great. All right, so I'm going to hit record here for a backup recording for you. So Sarah is an active trader in both the options and the futures market. She is the author of How You Can Trade Like a Pro and the founder of shecantrade.com, a company dedicated to sharing real live trades, market analysis, and resources for traders and active investors. Sarah provides her market analysis and trading insight as a regular contributor to Forbes.com, Minionville, nice blog, Infinity Brokerage, Infinity Futures, same thing. Her work has been featured in various media outlets, including TheStreet.com, Yahoo Finance, AOL Daily Finance, and Active Trader Magazine. When she isn't trading, you can find her on the ski slopes in the winter or training for triathlons in the summer. So without further ado, I'm going to turn it over to Sarah. Sarah, it's all yours.
Thanks, Hubert. And thank you to everybody for showing up tonight. I'm looking forward to talking to you. As someone who is an active trader, has been doing this for quite some time, it's always nice to be able to talk to other people. I always talk about how one of my least favorite thing about trading is that you do it by yourself. And as much as you try to talk to your computer, it doesn't really talk back, nor does the market. So it's always nice to have an opportunity to talk with other people. So I do want to let you guys know through this presentation, if you have questions or whatever, I hope this is an informal piece that you can feel free to type something in, and I'm happy to answer your questions as we go through this presentation. And then, of course, to give you lots of time at the end to ask questions, because I'm assuming that this is probably the first time that some of you guys have heard me talk. So you guys are all active traders, right? You are involved in the market. We know that right now the market is moving all over the place. So there is a lot of risk there, but there is tremendous reward. And it's just important that we all remember that we all want to be here as traders for the long term, right? You're not looking to just trade one time, make $1 million, and then leave, right? We all are doing this because we want to actively manage our money. We want to be involved in those opportunities that are available in the market. So always being aware of risk is really important. Over the years that I have been trading, I've learned that it's all about kind of trading over the long term. And so what I generally look for in the market is I want consistent returns. I want to be able to cash out on trades every week. And so what I'm really known for is trading consistency, looking to do that week after week after week when I'm placing my trades. And over the years that I have been trading, obviously the market has changed. It's shifted now. We're seeing really good volatility, which is awesome for options trading, but it also means you always want to be aware of your risk when you're placing trades. So let's say someone who's doing something like selling naked puts right off the top, there's a lot of risk there in a market that's moving like this. Sure, there's opportunity, but that risk can go against you very, very quickly. And if you want to be a trader over the long term, you have to know what strategies to place and when. So in tonight's presentation, what I'm going to do is talk to you about the strategies that are working really well for me. I'm going to give you some examples, I'm going to show you my charts, and we're going to talk through some of those strategies and why they're doing so well in a market like what we're seeing. I am definitely known for a different approach to trading, not only just in options, just trading in general. I don't know if that's a woman or that's because 8 years ago when I started this whole process, I was actually just trading part-time. And I have been able to build up my account and now do very, very well in the market. And I've been doing this full-time for a while as well. But I understand that shift. So I understand what it's like to trade with a small account. And I also understand what it's like to trade with a big account. And I think that comes across in the approaches that I'm using in the market. everything I'm talking about when I talk about trades, I think it's really important to be authentic. So I want to make sure that you guys are always seeing things that I actually have my real money in. That's so important to me. Everybody wants transparency, and I think that that's really important. So the examples we're talking about today, I mean, I'm going to talk to you about Facebook. A call I got in today, I was actually teaching a different course and doing some live trading. We bought the call, got out of it by the end of the day, and the people had already paid for their course just with that one trade that we placed all together as a group. So I do think it's really important to be talking to you about real trades that I'm using my real money in. I'm known for options trading, specifically in weeklies. That's really where my favorite place is. It's a really great opportunity to take advantage of a volatile market without the risk really getting involved. So we're going to talk about that. Just as Hubert said, I am very fortunate to be to represent professional options traders on lots of different avenues, including TheStreet.com and Forbes. I also have quite a few webinars that I've done for TradeStation, and so I'm kind of all over the place. And the other key piece here that's different that I don't think any other trader out there actually has is I have a Master's of Education that's focused in on adult learning. Now, I don't want you to think that I'm just a teacher, because that's not what I really did. What I really did was learn how to teach adults how to learn best. So before I was a full-time trader, I spent 10 years doing professional development. And I'm pretty sure that it's through my own work in my thesis for my Master's of Education, I applied all of that to myself when I was teaching or learning how to trade. So now what I do is take the knowledge of understanding how adults learn and how our brains work, and I teach people how to trade using those philosophies. So my book, How You Can Trade Like a Pro, is a book that I think doesn't really exist out there. It's a great landing point that not only discusses a lot of my strategies, it also gives you a ton of examples, but I get so much feedback on it that it's a really great book that has really clear step-by-step processes on how to do things. Okay, so that's kind of me in a nutshell. Here's a picture of me. I'm there on the right. I was on the New York Stock Exchange on the floor a couple months ago. It was a really neat opportunity. I was a guest speaker at the All-Stars of Options. And I had a really great opportunity to talk to some of the floor traders there. And I found what was really interesting is that when you ask them what they really trade, where they put their own money, and same with a lot of guys at the CBOE, is they're actually trading weekly options themselves. And that really hit home to me. That means I'm not only trading what I know works well and what has worked well for me over the years, but also where a lot of other professionals do the same thing. And that's so key. It's not about me trying to do something on my own. I want to be what the other people are doing as well. I just always want to be doing a little bit better. And I always want to be where other professionals are. When we have a market that's so volatile, it makes sense to be involved in those spaces, to be where other people are, and to just go in the same flow as those people have set up. So I spend a lot of time when I'm trying to figure out what I want to trade, what stock I want to get involved in, or what option or what strike to buy. I think it's really important to not only look at the options chain, because there's a lot of information to be read there, but also to look at charts. And my system and philosophy to trading really combines probability with charting and the options chain. And when you take the best of all of those three things, that's where I think you find a really great system of trading. So over the years that I have been trading, I've coached a lot of people, and I've had, as I said, a wonderful opportunity to speak to a lot of people. And the one reality that I unfortunately think a lot of traders miss is that everyone always tries to trade for the bullseye. Everyone places a trade, and they're looking for that $1 million in one score. They want the home run. But if you think about what a dart player does, or even a baseball player, professional baseball player, they can't hit a home run every single time. They can have a great batting average. They can still get points through baseball by getting somebody on a different base or getting onto first or hitting a double. That still helps, but you can't hit a home run all the time. And so my philosophy with trading is that rather than trying to just target here, right, getting the smallest point on the board in darts at the bullseye, what I would rather do is work on the areas where there's more opportunity to make money. And that's been so, so important. Why waste my time trying to hit a nail in a haystack when I have such a bigger target that I can try to make? And that's one big piece about trading something like credit spreads and options, is that I have a bigger board that I'm working on. There's more than one way to make money in the market. And when I'm trading something like a spread, especially on a weekly option, I'm holding that thing for 2-3 days and I can hit max profit on that. And I can do that week after week after week, so I can do it 4 or 5 times within 1 month. That means that normally by the end of the month, I've made so much more money than the person who's looking for the bullseye, and 2 or 3 of the 4 of trades that they've placed haven't worked. So my approach to trading is like the bullseye, or is like the board here. And my approach to it is, rather than trying to hit this, rather than trying to do something like a butterfly, or something that I'm always having to tweak because I keep missing the bullseye, I go for the bigger part of the board. I want to have a higher probability chance of success on the trade. I can follow around and do some doubles and triples and still have an amazing profit at the end of the week or month or year, because I have gotten into what I think is better trades that give me a better success rate than trying to hit the hole-in-one. So we're going to talk about what those strategies are and pretty well how I got there. So let's start with the market reality right now. It is important that you have strategies that will work regardless of what's happening in the market. So for me, I'm an options trader, and we're going to talk about options strategy. But I still like to watch the S&P, and I actually specifically watch the ES all the time. In fact, here, let me pull my charts up. So what you're actually seeing here are my charts, and you're seeing this is a weekly, a daily, a 60-minute, and a 5-minute chart. And what you can see here is that I pay attention to the trend, so I like to use the daily and the weekly chart to get an overall, like, big long-term idea of where the market's going. And then I do relate that and really help to find entries when I'm placing trades in individual stocks. So it doesn't mean that I'm going to look at this and say, oh yeah, I think the market is moving higher tomorrow, so I'm only going to buy calls. But what I want to do is see whether or not the ES is actually leading any individual stocks, whether the individual stocks are following, or whether that individual stock is just doing its own thing. We don't really know, but it is really helpful because it's going to help time my entries. Entries are so key with options trading, right? We want to make sure that we're not overpaying. You know, there are so many strategies out there with options that sometimes we can get really excited in seeing a move take off, that you feel like, oh my God, I've got to get in. When really, if we watch something like the ES as well and it's pulling back, then it's probably better to just give it 5 minutes and see whether or not we can actually make that trade work for us and wait for that pullback for an entry. So the ES is really important to me, and it's usually the backbone to my trading. So I will always start the day or throughout the day and the evening, check things and look at the ES and say, okay, what's actually happening here? Now, have you guys noticed that where the market opens during the week, we're not seeing it stay through the entire week? So I found this has been very interesting and very helpful when I've been trading. So if the market opens up on Monday, and then you see it continue to push up on Tuesday, what we're seeing is that we're actually seeing a reversal by the end of the week. And so for someone like me who's trading weekly options, this kind of means that this is actually going to be very helpful for me for finding winning trades and making sure that I'm not getting in at a top or a bottom. Those are always the worst places to be getting into trades, right? So what I want to do is realize, one, the market is volatile. Two, pay attention to what day of the week it is and which direction is the broad market moving in that week. Over the last few months, we haven't seen a week where the market has gone all in the same direction for each of those 5 days. So that means what I like to do right now is place trades out there at a price that I want. And I wait for those days for the market to pull back to get them. And then again, when we see some beautiful pops, then I'm just doing really well on those directional strategies. And it's just been working week after week. It's done incredibly well in the markets that are moving right now. So with the strategies that I'm trading, I always need to have an answer for how the market is moving. How is the market swinging, and how can I tweak the strategy to make sure that the entries are really the best place for me to get in? And one of them has really been noticing that if a stock is up for 3 days of the week, then Friday market is probably going to be down, erasing those previous gains. So with just that nugget in mind, that will help tremendously with entries, because we now know that it is shifting midweek. We are not sitting in a nice trending market. It is shifting. So how do we use that to our advantage? Well, that's how, is looking to see where the market opens at the beginning of the week, and then basically anticipating that by the end, it will be moving in the opposite direction. So that's been a really important piece for me. So we definitely have the reality of dealing with the influence of the broad market. We're also now dealing with economic impacts, and we're seeing that through FOMC. I'm sure you guys have been trading through that, where we have had Yellen come out with whatever was in her speech, and the market's been reacting to that quite significantly. Really, since if we look at the broad market and look at what's happened since November, the market has been in a huge shift. It has really been moving down, and it's been very reactive to a lot of economic news that have come out. So what we're seeing here is a huge force at play from that economic news, now probably more than ever. And then anytime we have a market that's selling off, or we're seeing the beginning of what might look like a bear market, is that driver of fear. And you can see the fear in the market, especially when you start looking at the options chain. So understanding how to read the options chain is really important, because you can see where market makers are putting in those little expected moves. We also want to be paying, volume is also another really helpful tool right now when trading. Regardless of whether you're trading futures or options, they're both quite helpful. So when I'm setting out my trade goals or my profit targets for that week and I'm placing trades, which by the way I always do live in the trading room, all the trades that I place in my trading room are the same trades that I'm placing. It's all the same. It's all transparent, and all the members see that. It's really important to be following someone who is trading their live money week in and week out. Is I have a higher probability of success of trades because I don't try to guess where the market is moving next. I always trade where the direction is right now. And here, Facebook is actually a really good example. So let's spend a couple minutes on a chart here. I'm hoping you guys find it helpful to look through charts. Oops. So as I said, I was actually teaching a course today on puts and calls with some of my members from the trading room. And with the courses that I teach, I always do a live trading session as well. It's so important that not only are you getting content, but you want to get the live trades too. You want to see how someone actually puts those things together and decides, you know, the little pieces. It's not about, oh yeah, I'm buying a call because I found a chart that's moving higher. It's about, okay, I looked at the chart, I think something's moving higher. Now let's go into the options chain and talk about what strike is the best deal to purchase. Where are those deltas lining up? Where is there already support that's already there to use as our advantage for entering? So Facebook actually is a really great example of not really trading where you think something's going, but trade in the direction that it is now. So here in Facebook on a daily chart, over the long term, if you try to determine this trend, and we look here, it's actually not that apparent. We actually saw the market pushing down, it popped back up, it pulled back down. It's really not a strong trend in the daily. If I move out to the weekly, it does have a stronger trend. And the really nice bit and why we got in today, and by the way, I also traded Facebook and made profit on this pop here. But what I did was cash out on this when this popped up. This actually went quite high, and we did really well on Facebook last week. I got out of it, cashed out of it, and then waited for price to come back to the 8. And this is what I had told all my members. You know what? I'm going to cash out last week of Facebook. I'm going to wait for it to pull back. Why? Because we know the market is really volatile. We knew that the ES had already pushed up, so it was kind of time for it to push back down, which it did. And then what we saw today is it actually had quite a big drop this morning, which meant there was some great opportunity to get in. So rather than, if you kind of look at the 60-minute chart here and seeing that price was actually starting to pull back, this morning it gapped down. So what I did, even though my foundations indicator this morning was saying get in, get in, get in, I'm a real trader with real money. So it doesn't, I'm not going to tell you, oh yes, I got in exactly at 9:35 this morning, because I didn't. What I did was wait for proof that Facebook actually was moving in the direction that I thought, which was higher, and I did want to buy a call. So I actually waited, and I'm not going to say to you guys, oh, I got in 103, because I didn't. I waited for this to actually come up, and I didn't actually place the trade until this afternoon. I think it was a little bit about 1:30 when I placed that trade. So it had actually proven quite a bit. It had to really prove to me that, yeah, this thing is going higher. I wanted to make sure that it was going to get through any kind of resistance that it might have had on the daily chart. And you can see from this momentum here on the 60-minute, it had quite a bit, so that's fine. But once we had confirmation that this was continuing and have higher highs, then of course I wanted to jump into that trade. And so I picked up the call, and I actually bought it out to expire March 18th. I was going to leave this one on for a little bit. But, you know, sometimes when things work out really well, which is Facebook, again, it was kind of on fire, so by the end of the day I just cashed out on it. So it ended up being a day trade, even though I didn't really set it up to be a day trade, but it had hit my profit target, so why not? So I don't know, I thought Facebook was a really good trade, but a good example of showing you how I really need to wait. I want to wait for proof that it's going somewhere. So did I miss $1 of the move? Yeah, I probably did. But did this go against me? No, because I waited for confirmation that that was setting up. And I think by doing stuff like that, it really, really helps you achieve whatever your goals are for trading. So again, I just kind of, where I am right now is California. So I am Canadian. I live in Toronto. And if you know about Canada or a cold climate, it generally is very cold. And while I do like winter, I have a 2-year-old, and trying to put a 2-year-old in a snowsuit and a toque and everything is not something you want to deal with. So what I do is escape. For the last 2 years, I've come to California for the winter. And this is a great goal that I had set out for myself in terms of my trading. When I first began to say, yeah, you know what, I want to do this full time, it was really important to me that I could still trade and still have a life where I could do what I wanted. Something that I couldn't do if I was working 9 to 5, Monday to Friday. So the manner of which I'm trading and my approach to the market is that I still want to be able to do other things. So I get to wake up in the morning to an amazing view, as you guys can see. I just took those pictures, and a great sunset. And I get to enjoy the beach, which is awesome. I get to trade in the morning and then enjoy the outdoors for the winter. It's amazing. And it's a real marker for me that I have achieved my goals. I have not only learned how to trade, I have traded very successfully and continue to trade in a manner that allows me to do other things as well. And that's fantastic. So over the years that I've been trading, I'm a little bit competitive, as Hubert mentioned at the beginning. I like to do triathlons. I like to ski. I like to figure out how can I make something the best, right? And by the way, I am not telling you that I am 100% right on trades. That's not what I'm saying. I am a real trader. But I try to always endeavor to be the best. And so through the process of trading options and testing things out over time, I really found that there's a huge advantage in trading weekly options as opposed to monthlies. And here's why, and I've mentioned it just even giving you an example there with Facebook. If you can go in and out of trades more often with weeklies, then with a shorter amount of trades, you can actually make more money in the same time frame as someone who's doing monthlies. So when you trade with probabilities, the shorter and longer trades have similar chances of working, but in the shorter trades, you can do them more often, and that is what has made a huge difference. So understanding how long to hold a trade is key. For me, if I'm doing credit spreads, I want to hold those things 2-3 days most, and I want them to hit max profit. When I'm setting up more directional strategies, I want to go out 3-4 weeks, but I really want to look to hit that target within a week. So my goal is really to be placing trades and to be getting out of them the same week or the week after. So as I said, what I have done with my strategies over time is always had kind of like a competition with them, and that's been so key. So I've always tracked different strategies and trying to figure out which one works. You know, like trading options is kind of, I talk about it like going to the Subway trying to buy a sandwich. So sometimes you're going to go to Subway and you're going to choose what you want to have on it. You can have different meat, you can have different veggies, you can have different bread. There's lots of choices. And it's the same thing with options trading. Quite frankly, there's a ton of strategies out there. And there's always an answer for something, right? You can always tweak things and whatever. That's not what I'm about. What I want to do, because I always have my money on the line, is know what strategies actually do really well for me. And so what has done well for me time and time again over the years is buying straight puts and calls, keeping it nice and simple, focusing on getting into the trades at the right time, at the right price, because that's so key, and credit spreads with weekly options. So I have a little bit of selling, so I'm taking advantage of premium, and then I also have some bigger moves with puts and calls. Time and time again, if I try different strategies, these ones, if you pair the margin requirement, the probability of success, and the ability to do these and still do other things throughout the day, they are the best strategies. And these are the ones when I look at my account over time has grown them so much. So I guess people are probably saying, okay, great, well, I know how to do those. But I would actually probably say to you, especially because I've had the good fortune of, Tom Sosnoff has invited me down to Tasty Trade and we've chatted. I've had the opportunity to meet some really big people out there, is that my approach to those strategies is different than how a lot of people trade them. And that's probably why I'm able to come out with a higher probability of success of trades, because how I collect the evidence to place those trades is different. And that's what I actually didn't realize for a long time, that my actual approach to putting the trade together, to choosing the strikes that I'm going to trade, is very different. And that's why when it comes to the end, I'm not managing trades. I don't believe in tweaking trades. So my approach to trading means that you're not adding in different legs at different time or switching things around and changing directions if it doesn't work. I am really about focusing the time and energy on understanding how to get the best out of both worlds. So how do we get the best out of charting? How do we get the best out of the options chain for probability and get the timing right? And if we do our work, if we front end the work, then there shouldn't be any work at the end. Our work at the end should be, how much money do you want to make? Do you want to leave it on for max profit, or do you want to get out for 5 cents? Those should be your biggest issues, right? And so that even alone makes my strategies very different. And what it means then with the way that I do place these trades is that it can be added to an existing type of trade. So if you're a futures trader and you just want to have a little bit more opportunity to take advantage of premium or volatility, so you want to add these strategies on, or whether you work full-time and you want to be able to just do a little bit extra, that's the approach that I am taking on these trades and using these strategies. I have a 2-year-old, and I choose to still spend time with her and be a very active mother. So I need to have time to be able to do that as well as still trade for a living. So my approach to the trades really is a way that I try to be as hands-off as possible once I've placed the trade. So I want to do my work up front, and then hopefully I'm not really having to do much. Okay, so you're probably saying, all right, Sarah, so then how do you do this, right? It starts off by focusing a lot of time on how to enter a trade. I have a lot of patience for entries. So I will load my work up front, right? We talk through this all in my live trading room. I talk through why I'm getting into a trade, where I think those profit targets to be, and what I want to do. I want to have patience for the entries. So actually, I'm in a trip put right now. The first day I tried to get into it, on Tuesday, I didn't actually get filled. So I had to go after it again today, and I had to change what I was willing to pay for it, which is fine. I mean, it's still set up really nicely. But I want to have patience for my entries. I don't care that if the first day I don't get filled. That probably means that I'm right. Anytime you have to really sit on trades and hold them for a little bit in options probably means you're correct. And it's the market makers that kind of have to compromise a little bit and wait for a time that they feel they can make a little bit of money off you too, right? But the key to having a good entry is that in a market like that's really volatile, once you have been filled, then it's okay to be impatient. And that's where you want to look, like, for example, going back to that Facebook example that we traded, that's where you really want to go back to saying, okay, you know what? I am going to be a little impatient here. I waited for a nice entry. I already had exited once here, already did well in this call with this bar. I exited, cashed out, waited for price to pull back. It did. And then we waited and waited and waited for a little more proof. So again, I was being very patient. And then bam, it took off. So at that point, I was like, yeah, that's a great trade. I'm just taking my profits there. And I exited again. Now, Facebook could set up again for me tomorrow. If it pulls back to the 8th, then beautiful. I'll be right back in this one again. And that's what's so nice about trading with weeklies is I can take advantage of how those things are pulling back and forth. So many traders are actually only using strategies that are good for bull markets, right? A lot of neutral strategies especially will get really buried in a market that's moving all over the place because those can really, really hurt. I do believe that it's always important to come up with a direction of where you think something is moving and then really focusing on how can you set some targets from there. I love volatility. What options trader doesn't? There's a lot of opportunities to be selling and just taking premium right now. It's a lovely thing. And it is really nice to be riding the wave as the market is moving. Just make sure you're on that right side of the wave and you get to really enjoy things as they're moving. So let's get into some charting and let's I want to show you a little bit about differences between when I'm looking for something that's more of a call or put versus a credit spread. Oops. Okay, so we've talked about Facebook. That one has worked really well, and it worked really well today. Another one that I love to do credit spreads on is CMG. Now, a lot of people are afraid of CMG because it has a really wide bid-ask. But I actually think that wide bid-ask can really give you some good opportunity to get a good deal. So as long as you know that that's what CMG is about, then that's okay. It's all good. So looking at CMG here, On a daily chart, I mean, okay, well, one, we all know that there's been a lot of news about Chipotle, right? We know about the E. coli issue, and then stuff about FDA has come out, then I believe even stuff about charges. Like, it's been Chipotle has gone through a bit of a rough road. You can see that in the charts. Since October, we've seen this stock really, really plummet. So it's been more difficult to trade. But lately, we've seen a real evening out, which is a new opportunity, again, to be trading credit spreads on this one. So CMG is an example of a very expensive stock, but because I'm trading credit spreads, it's allowing me to actually have a lower margin requirement, and I only want to take the trade and hold it 2-3 days max. And doing these credit spreads, when I look back at even just in weekly options over the years I've traded, before this October, this news about CMG or Chipotle that had come out, I was doing CMG almost every week with the same strategy. So when we're talking about option strategies and the question is this repeatable? Well, it's very repeatable. It's something that in here I've proven and have done over and over again, which is great. So is CMG a really great candidate for a call as well? Well, sure it is. I do think that CMG is going to continue to move higher. I don't think it really belongs down here at 450, and this is a result of some of the news that has been happening. However, it has a lot of resistance, right? It has to work through quite a bit as it has sold off for so much time. And we also know that we had some news that came out about CMG today, and we saw the market, this stock actually plummet down again. So it's very sensitive to news as well. So that makes it a difficult candidate to try to trade directionally. We know that impacts of the media are really changing how this stock will move, and that can make it trickier to trade directionally. So what we can do is trade a credit spread here and just take advantage of the premium. The nice thing about CMG is it is a stock that's been moving all over the place, so there is a lot of premium that's there already. The premium is what I want to take advantage of. I want that out of the money stuff. I want to trade options that have no value, that just have premium, and I want that just to expire worthless. So I want something that has some resistance, which CMG does. This one is very expensive, so I can use that even more to my advantage by trading further out. And that bid-ask actually is very helpful. The other tool that I like to use when I'm collecting evidence, as you can see here, is the foundations indicator. This is an indicator I came up with and programmed. And you'll notice here that it has, if you look at it, it's blue, red, blue right now. So that's basically saying CMG is not really going anywhere. It doesn't have a lot of momentum. It's not about to jump out anywhere. So if I'm making my choice then about what do I want to trade, it doesn't really make sense to me to buy a call or put. I only want to buy a call or put when I do think something is about to have a nice pop. And since this isn't really looking, there's resistance on a weekly, the foundations indicator isn't setting up, it's basically just kind of been sitting in this consolidation mode here. There's no sense in having time work against me with a call or a put. It makes way more sense to me to just take the credit. So I'm already in a CMG credit spread for this week, and right now it's sitting beautifully and it looks great moving into Friday right now, and tomorrow is Thursday, so that's awesome. And it's a trade we placed today moving into Friday. Okay, here's another one I love to trade for credit spreads is Amazon. Amazon is kind of all over the place. If you try to look at a daily chart and pick the trend on Amazon, we'd probably, if I asked you, to all have different opinions about it. And so the question then becomes, all right, one, again, it's an expensive stock. Do you want to put up the money to buy a call in something like this, especially as it's moving right into resistance off of a weekly chart? Or how can we take advantage of how this is moving? So how can we look for some spreads that would take advantage of their premium by using that directional bias? So many of you might trade iron condors, right? And you say, or what some people do is they're like, okay, I'm going to do an iron condor, I'm going to take credit, I'm going to figure out what the standard deviation is, and I'm going to trade up into the 2 standard deviation move, because statistically, that gives me a very high probability of way to trade. And then they place their iron condor, and there they go. And then what happens is you get frustrated because you place the iron condor, and it actually ended up breaking through one of the 2 sides. And now you're dealing with management. Management of trades is never fun, right? That's not the goal. And so what I would say is, I think you actually have a better probability of success of a trade if, rather than just going out to wherever 2 standard deviations are, because there's not a lot of credit on either side and you're opening yourself up to a lot more risk, why not use the charts to come up with a directional bias of where you think it's going? And then use that in terms of where you think it's going, look for some levels of support and trade under it. Use those levels of support basically as shields, and you want to take the credit that's just behind it. So in Amazon here, if we wanted, we could do a put credit spread because there's a lot of support here, so trade underneath that. Or on a weekly chart, it's just pushing into a lot of resistance right now. We might actually want to do a call credit spread here. But if I placed an iron condor and did both, right? If all of a sudden I'm going to trade the 574s and I'm going to do the 540s or even 525. I think what you're doing is you're just waiting for one of those 2 to move. Like we said at the beginning, remember, the broad market isn't going in the same direction for 5 days in a row. So what might look good today, we still need to anticipate a shift moving into Friday. So if I've done an iron condor, this is not a neutral market. Do I really want to be putting on a neutral strategy? Amazon still has direction. We've seen direction in it. You can see over the last few days that it has moved quite a bit. And if you look at average true range, you're going to see that it is moving. So how do we kind of mitigate that risk? Well, I think it's by looking at the current direction and saying, yeah, you know what, it has a short-term trend up here, but it is moving into resistance. So let's keep that in mind when we're actually trying to trade the credit spread. So another one that I was hoping to get into this week, but I can't because it really took a fall today, was Disney. This was one that I thought was actually setting up quite nicely, and I did think had some momentum to get through resistance. But again, is proof about how important it is to wait until we actually have proof that it's going somewhere. Had I looked at this at the beginning of the week and said, oh yeah, I've got to get in, it's moving up higher, because look, it's just gone up and up and up, and it's pulled back a little bit, then I would be in a losing trade right now because I wasn't patient enough to actually make sure that it was actually moving higher, that it was going to break through that resistance. And I'm glad I did, right? Again, I was being patient about my entry here. Because if I had gotten in that call then, I probably would have overpaid, and now I have time working against me because I've had a couple days where Disney has actually just moved sideways, so that hasn't been good. So what I want to wait for is patience, is proof that these things are actually going to move. So by the way, on my charts, these are exponential moving averages, and what I use are the 8, the 13, the 21, the 100, and the 200. And actually, let me write that in the chat room for everybody too. All right, can you guys see that in the chat room? And I do definitely, so they're exponential moving averages. They're not SMAs, they're EMAs. And those have been very helpful. The 8 especially lately has been very, very helpful for trading. So I love training. I love showing people how to trade. I love making people feel absolutely empowered. And I hope that I've given you guys some tips today to actually be able to place tomorrow, because those are key. And if you're trying to make trading more complicated than it needs to be, then you don't have to. I'm here to prove that things actually can be simpler and they can be successful. So these are just 2 comments that I've just very recently received. These are members. I actually had quite a few more because I ended up teaching a course today. And I think this is so important to be writing about. Learning and trading from you, which is me, has given me a new direction, more self-confidence, and a really fun and exciting way to make money. The most meaningful aspect of learning to trade for me is that it has given me the hope that I can have a better life. That's something really powerful that you have contributed to. Thank you for that. To me, that is why I do what I do. I don't want to just trade and trade. I want to trade and have people know how to do it themselves. I want to be able to talk about what to do and then people be able to go do it the next day. I know I can make money. I do trade all the time. I want everybody else to as well. And so I'm all about empowering people with that skill to do that. And that's why we have a trading room that's so different. That's why I get asked to do so many different talks, because I'm happy to be authentic and transparent about trades. I'm happy to talk about trades that work and don't work. And I'm happy to explain that process. The unfortunate part about trading options, or trading in general, is that most people don't make it past 3 months. And I don't want that to happen. I want people to be able to get through those parts. The bumpy roads at the beginning when they're experimenting with strategies and figuring out which one works and which one doesn't. I want people to know that you can trade in a simple manner and it can still work without always feeling like you need to tweak things or you need to be in front of the computer all the time. So I do want to offer you an opportunity to be part of a 4-hour course, and I'm going to do that for only $97. So this course, which will come up in March, will be available for anybody who wants to learn actually how to place those trades, how to set it up, and we're going to go into real detail. When I teach a course, the course is not about, what is a call, what is a put. It's all about strategy. It's all about understanding, how do you actually do this? What are the goals? What are the look-fors? How do I actually walk away with those things? So we spend 2 hours really just focused on the actual strategy and actually coaching and answering people's questions. And then we spend 2 hours of live trading. And that's where I'm actually putting my money down where my mouth is and placing trades and walking through trades together. And just like I taught a course today doing the calls and puts, everybody who was in the room did really well because they placed that Facebook trade as well. So you get the advantage of not only understanding the strategy, you get to actually see someone really trade for real. And that's what's so key. So it's like a coaching session along with a strategy session. For $97, it's a really amazing value to get 4 hours of learning that's recorded, and you can go back again and watch it over and over again if you want. The strategies are time-tested, meaning that they've worked well in a volatile market that we're seeing now. And 2 years ago, when we saw the market trending beautifully and it just kept going higher and higher, well, it was also great then, right? It's always nice to have strategies that, whether it's a bull market or bear market or somewhere in the middle, you still have ways to trade. And that's what this does for you. We're going to talk about how do you actually set up the trade. How do you manage the trade? How do you stay in it or know when to get in and when to get out? And, everyone always talks about entries, and entries are really important, but exits are also important because there's nothing worse than placing a trade. You have a ton of profit, but you get a little greedy and maybe hold on to it too long, and then the next 2 days, the actual stock moves against you. That means you've done all the work, you've had a great trade, but you didn't actually get to cash out. For me, at the end of the week, I want to put profit in my pocket. I want to cash out of the trades. So we're going to spend time understanding when do you actually want to get out of those trades. And what strikes do you actually want to buy and for how much? And that's what's really important. If you're looking at your trading plan and you're saying, yeah, what I really want to do is I want to trade. I don't want to, risk a lot, but I want to make a lot of money. You need to know how to evaluate trades for how much is really worth risking, right? And that's what's really important with calls and puts. And that's what can make the difference between a winner and a loser, is understanding how that bid-ask is moving, understanding how that volume is affecting price, and where is there a lot of open interest? What are the deltas that you're expecting, and what is a profit target we can actually hit? So in that course, we're going to go through all of those things. It truly is an incredible deal at $97 because you're getting live trading with coaching and you're getting the course recording. For somebody who has a Master's of Ed, I know how to teach and I know how to trade, you will find that this course is different than other courses. And I know it's like, oh, someone's telling me this. I get it. But it really is different. And I hope that even just those 2 remarks that I put up here of actual members who have just gone through some of the learning that I've done shows to you that things really are different. You actually can learn some setups and then go place them tomorrow, and they can work out really well for you. We are really different at She Can Trade because it's live, it's authentic, and it's real trading. The final piece, which is the longer term piece of trading, is managing risk and reward. Everyone can come out here and say, oh yeah, look at me, I made $1 million on this trade, but they don't talk about the trades, the 10 other trades that didn't work. Profitability and then actually having winning trades are 2 different things. We are all retail traders, right? We have commissions that we have to worry about when we're placing trades. We want to figure out how can we actually place trades in a manner that can still make us money in the long run. How can we have an equity curve that is constantly growing each month, that isn't up and down like a heart rate monitor or someone having a heart attack? I don't want that. Nor do I want you to have a heart attack. I don't want your account to look like a heart attack on one of those heart rate monitors. You want to have an equity curve that does go up. And so you want to make sure that you always are managing that risk, because there is risk in trading, and understand how do we maximize the reward. And I believe that that is the real key to trading over the long run. I want you to be that trader that lasts more than 3 months. I want you to be that trader that moves from part-time to full-time. I want you to be that trader that is in retirement and gets to enjoy the beach just like I do, and you get to place trades. It is possible to reach whatever goal it is you've achieved for yourself. But you need to make sure that you're following the right person, and you need to make sure that you're setting out goals that are realistic for you. Something I've always lived by is the only difference between a dream and a goal is a timeline, right? And when we're trading, let's make sure that whatever it is, that timeline that you're setting up for yourself, you're setting up achievable goals so you can get there. Let's turn the dream into a reality. And that can happen with good, solid setups, and also understanding how to set that up accordingly to the account size that you have. So I hope that you guys will join me, and I think what I'm going to do is put the page over here just so people can see it. Here we go. And I'm also going to put that through the chat window to the entire audience, so you guys should be seeing that link in there as well. So the course will be Thursday, March 3rd from 7 to 9 Eastern Time, but again, it'll be recorded. So whether you can make it live and put part of the course, or you just want to receive the recording for $97, if you had done the course with me today at $97, you would have made that back in the call that we did just in the live trading from this afternoon. So I can't promise that. I'm a real trader. But in the 2 years that I've been offering courses, I've had that come up over and over again as well, is you do have opportunities to actually trade live, and what they made in the live trading covers the cost of the course. Again, I can't promise this, but it is normally what happens. So the course is Thursday, March 3rd between 7 and 9 p.m. Eastern. And then what I want to do, and this is really important, I want to give you time to not only watch and review the course recording and the strategy sessions, but because I'm going to give you a bit of a cheat sheet, because I'm going to give you a trading plan, I want you to have some time to apply it yourself, to look through trades, and then we're going to come back and regroup March 8th. So I'm actually going to give you 2 more days in the market on your own to really look yourselves, and then we're going to do a live trading coaching session together, and this is all included for $97. So you get 2 hours of the course content and then 2 hours of live trading. You can ask the question, ask away. You can see me go through application. You can see me actually take some of those things about what we're talking about. I'm going to show you what I'm talking about and then actually trade them, and you can trade them too if you want. And both sessions will be recorded, and you can always go back. A year from now, you can go back and watch it if you want to, because I really think it's important that everyone gets access to good quality learning. So it's a really great opportunity just to even watch me trade for 2 hours so that we can really work through things together. It also gives me an opportunity to get to know you a little bit more and know what some of your trading goals are, so we can make sure we're tweaking the course to be just what people are looking for. What's really important, though, is at the end of the session, you are going to walk away with a volatility cheat sheet. Understanding how to set these things up and when will be really important. And when I first started to trade, I actually had, and I talk about it a lot actually, is I had sticky notes everywhere, right? I had made myself notes and goals and things that I'm looking for, if this, then that. And I want to give some of those things to you so that you do have a step-by-step explanation of the setups, which will really be important, so that you can go and do it yourself. That's what I want. I mean, of course, if you want to keep following me in the live training room, that's great too, but I want to give you the information so that you can do it yourself. I have been approached several times to start a fund based on how well I do in the market, and people ask me, why don't I do that? And the reason is, I believe in this industry that the most empowering thing is learning how to do this yourself. To me, that's what I love about trading. I love knowing that at the end of the week, I have done really well, and it feels so good to know that I did it. I want other people to have that feeling. So that's why I do what I do. That's why I come out in public and talk about trading. That's why I go through it in a very different manner. I mean, I have a Master's of Ed. I was a learning consultant for 10 years. I know how to teach and I know how to trade. And those two skill sets are very hard to find. Most often there are people out there that are just doing education or just trading, and I can do both. And that's why I get the feedback that I do. That's why I wrote the book that I did, because I'm all about wanting you to feel the same way. I want you to finish at the end of the week and feel awesome that you were able to do this yourself. It's all about empowering you with this skill set and information to go from a good trader to a great options trader. Whether you're just adding these two strategies just to your existing way of trading, whether your futures, options, stocks, or whether you want to make this your full-time gig, that's fine too. In my live trading room, we have all sorts of different people that have all sorts of different goals. Some people are still working full-time. Some people are retired. I've had people that have started as absolute beginners and knew nothing about options and are now trading full-time. I've helped people through that process, and that's why what I'm doing is different. I also didn't mention it, so not only are you getting the 2 hours of content with the live trading, the market volatility cheat sheet, but also a trading plan template. Lots of people talk about the importance of a trading plan. Not many people actually share it. So anybody who does sign up for the course will also get a template. And this has got very specific questions to help you talk and think through how are you setting up your trading plan for success. Are you trying to actually achieve goals that maybe aren't achievable? And what I've done is put in some very effective reflective questions to help build your own trading plan. This trading plan template is the same template that I use, and it really is very helpful. It focuses on your market, it focuses on understanding your drawdowns, it focuses on what are your goals and what are you trying to achieve, and what kind of stocks are you trading. We didn't really talk about it in the course, but that's the other thing. There's so many stocks, there's so many indexes, there's so many things out there. These strategies can be placed on any of them. Whether you want to do options on futures, whether you want to do calls and puts in stocks, whether you want to be in ETFs or indexes, these two strategies work on all of those areas. So it's very versatile and it's very repeatable. These are the strategies that over the years I have always fallen back on and always the ones that have worked the best. So that's why I really want to encourage you guys to get in on this as well and be part of this. Be part of this movement of understanding that, one, trading can be simple, two, it can be successful, and you can have a life and still trade. So I'm really excited for you guys to be part of this, and I'm really excited to have had the opportunity tonight to talk to you. I think this was wonderful, so I thank you. You know, these markets are very volatile. If you've just begun to trade and you're just getting started, if you think that the markets are always like this, they're not. Since November, it has been a tougher time to trade. It just has been. It's, you know, a year ago, probably a year and a half ago now, like not this past summer, the summer before that, anybody could have made money in the market, right? Everyone was doing really well. The market was trending higher. It was lovely. Well, those are great scenarios, and everybody looks like a rock star. If you can trade successfully now through these last few months and you're still here, that means that those strategies really do work, and you really can do what you can do. You can really make this excellent because it isn't an easy market to trade. And if you're new, you probably don't know that this is actually a really tough time to trade. So it is really important that you're following somebody who does know strategies to apply and how to accommodate for a market that is moving this way. So I'm really excited to work with you guys, and if you haven't had someone, I think it's for $97, it's worthwhile coming and seeing how different I am and how you will finish that course feeling very different, feeling like you have gotten tremendous value, not only from just the course content, but also from the live trading and the ability to answer questions. I'm always happy to answer your questions, and I know I haven't been able to get to them tonight, and I'm happy to answer them. If you guys want to send me an email at info@shecantrade.com, I'm happy to do that, or you can go to the website at SheCanTrade as well. That's also great. But I don't know. I love seeing people through the process and the journey of trading. And even if you're an existing trader, you've been doing it a long time, taking people from good to great is a very rewarding thing for me. And I love to see people succeed. So I look forward to seeing you guys in the course. I'm very excited about working with you. Come and check things out at She Can Trade or the course at $97. It really is a great opportunity. All right, guys, I'm going to end it here. And again, thank you for coming and spending the time tonight. And be careful, be safe in the markets. There's lots of opportunity, but risk and reward is really important. All right, take care.